Good morning, good afternoon, good evening, and welcome to The Nest. It's August 13th, 2020, and we're streaming live with participants from Africa, North America, Europe, and around the world. For those of you joining for the first time, I'm Jim Chu in San Francisco, California, and our goal here on The Nest is to connect entrepreneurs in frontier markets with angel investors worldwide. We stream live every Thursday, and all episodes are recorded and available on our website, findthenest.org. Today, we have two exciting companies from Nigeria, one looking to digitize banking in Africa, and another helping us manage complicated power systems in emerging markets. We'll hear all about them in a second, but before that, let me introduce our partner for this week, Idris Bello from Lofty Capital Management, an impact investment group serving Africa. Idris, welcome to The Nest. We'd love to hear a little bit more about you and Lofty.
My name is Idris Bello. Okay, so I think I'm joined from two.
Yes,
my name is Idris Bello. I am founding partner at Lofty Inc. Capital Management, an early stage VC focused on West Africa. Lofty Inc. is part of the Lofty Inc. family. Lofty Inc. Capital is part of the Lofty Inc. family, which has over the past decade played a leading role in building Africa's technology ecosystem, particularly through our work with Innovation Hub, our accelerator, which has supported thousands of entrepreneurs in and around Nigeria. So through our Lofty Inc. Afropreneur funds, we have over the past decade invested over $3 million US in over 20 early stage startups, some of them which are pretty much well known. Yeah, so over the past decade, we have invested in over 20 early stage African startups, which include Andela, Flutterwave, Reliance HMO, Eden Life, and a bunch of other startups which are well known. Our thesis for investment is that early stage investment is really about our people. So startup investment selection and value addition must be made by experienced entrepreneurs who have insight into these local markets. So when we invest, we're looking for balanced founding teams who have a bias towards execution and who are going to, after a large market with a product that users need. We support our investees with investment, strategic introductions, good mentors, financial advisors, and then we prepare them for future rounds. Our ticket sizes range, initial ticket sizes range anything from $50,000 to $250,000. We follow on as needed. You can check us out on our website, loftyincapital.vc, or you can email us at invest@loftyinc.limited.biz. That's INVEST at Lofty Inc., LOFTYINCLTD.biz. We're very proud to be associated with Nest program, and we look forward to seeing great things come out of it. Thank you very much.
Great. Well, thank you very much, Idris. Glad you guys are here, and thank you for co-hosting with us. So let's cover some quick announcements before we get going. So next week on Tuesday, we'll be having our first Nestcast Live, where we'll host entrepreneurs and investors to talk about topics that are relevant to entrepreneurship and investing in emerging markets. On Tuesday, we have a very interesting topic. We'll be talking about race and entrepreneurship in Africa. Does it matter? Why are there so many American entrepreneurs in East Africa? Some say it's easier to raise money as a startup when there are non-Africans on the team. Is that true? Is it racist? Come and join us for the conversation next Tuesday at 9 a.m. San Francisco time, 5 p.m. London time, and 7 p.m. Nairobi time. And then the week after, we will actually, the same week on Thursday, we will have the French version of The Nest on Wednesday at 9 a.m. and 6 p.m. Paris time, 9 a.m. San Francisco time and 6 p.m. Paris time. And then 2 weeks after that, we will have a session on September 3rd with the Wharton Africa Club after taking 1 week break. So join us for all of those, and especially next week for Nestcast Live and the hopefully interesting discussion about race and entrepreneurship in Africa. So with that, the next part is the technical tips for today. So please, we want you to participate in this conversation. So please use that chat box for asking questions, making comments, and potentially even making investments. In the meantime, use it to introduce yourself, tell us who you are, what you do, which country you're from, and what brought you to the nest. So we want to hear from you. This is an open conversation, and we've done that on purpose so that you can engage others on the show and also engage in questions. With that, let me hand it over to the angels. Tomi, would you like to introduce yourself?
Sure. Hi, everybody. My name is Tomi Davis. My day job is advocating for Africa's early stage entrepreneurship ecosystem. I am a co-founder of the Lagos Angel Network, where for the last 8 odd years, we've been investing in startups from Lagos, Nigeria. I am the founding president of the Africa Business Angel Network, which actually looks at how to educate local investors on angel investing, help them create angel networks, which we've managed to do in 49 networks in 33 odd countries across Africa in the last 5 years. I'm also a board member of the World Business Angel Forum. I chair the Diaspora Angel Network, which is out of London, and I'm also a member of the Global Business Angel Network. With the little time left, I used to manage my growing portfolio of about 20 odd startups. That's me. I tend to do, in terms of investment profile, I focus more on pre-seed, post-revenue. I tend to co-invest either with my private syndicate, the Technovision Syndicate, or with the Lagos Angel Network, or increasingly, as we just started to do with multi-network deals. I personally, my ticket size is 5 to 20K in transactions of about 100 to 250K. I'm looking at startups that are in primarily Nigeria, technology-enabled innovation, in essentials, things like food, agriculture, health, education, platforms I like. I love fintech, software as a service, and B2B type things. In terms of criteria, I'm constantly looking for strong founding teams with the relevant background and having invested enough time in what they're putting in front of me. Legal entity, fast growing market that can be shown. You can demonstrate that this is an addressable market that's good to go. With a highly scalable business model, and I want to see potential social impact, ideally in full flight, looking at about 1 million odd people. I don't like being first in, but I like being a fast follower of those first in, looking at anywhere from 20 to 100K in revenue. And most importantly for me, identifying how I can personally add value, what I'm going to be bringing as a mentor or as an advisor in addition to the cap. So that's me in a nutshell. Everybody calls me TD. You'll find me on social media as Tomi D, TOMI, or just hook up to my website, tomidavis.com. Thank you.
Great. Thank you very much. And thank you for joining the Nest. And so you've been in the startup ecosystem in Nigeria and West Africa for a very long time now. Have you seen a lot of change in the last few years, an upswing in activity, and or even a difference in the quality of the startups?
The answer is a dramatic yes. We're seeing more founders, an increasing number of founders, but unfortunately, I can't say that we're seeing an increase in quality. So we're still seeing the founders that stand out head and shoulders, like the Iya Boyajis, like the Tayo Viosus, Jason and Njoku's, revisited. We're seeing quite a number of those historically being, the 1%, 2% of the whole, and it's pretty much stayed like that. We have to sift through quite a number of propositions to get into the Flutter Waves and Paystacks.
Okay, great. Well, thank you very much for that perspective. Glad you're here. IK?
Hi, everyone. A pleasure to be here amongst TD and my sister, EJ there. So my name is IK Kanu, founding partner of Atlantica Ventures, and we're an African-focused fund investing in the next generation of tech and tech-enabled entrepreneurs that are mission-driven and have a social impact, but we're keenly focused on driving financial returns. And in terms of the stages we invest in, we coming anywhere from seed stages through to follow-on through Series A and Series B. So checks as low as about $150,000, going as high as $5 million. And in terms of the markets, we are Pan-African, but we're not boiling the ocean. So we're looking at 6 focus countries. In East Africa, it's Kenya, Tanzania, South Africa, and in West Africa, Cote d'Ivoire, Ghana, and Nigeria. And the sectors we like are primarily B2B or B2B2C. And those go around from fintech, and that covers payments, and we'll throw in insurtech there as well, because I'll put there as part of a fintech, wealth management, et cetera. Looking at IoT as a platform, agri-tech, and also digital security and logistics. Thank you.
Great, thank you, and welcome back for a second time on the show. Thank you.
Yeah.
And Ijoma, IJ, welcome back as well.
Thank you, Jim. Hi, everyone. Hi, IK. Good to see you here. Hi, TD. My name is Ijoma Agboti. I'm the MD of FBN Quest Funds. FBN Quest Funds is the alternative investment arm under the FBN Holdings Group, which in turn is one of the oldest and largest banking and financial services conglomerates in Africa. FBN Quest Funds is about a 17-year-old business. We're one of the earliest institutional investors in the alternative investment space in Nigeria. We have done a combination of strategies across the alternative investment value chain, from venture to pure private equity. We've done private credit. We've done a little bit of real estate in there as well. So quite a broad spectrum. And we continue to invest on the continent. I've always really enjoyed Jim's sessions. I really love what he's trying to do. I am very personally passionate about entrepreneurship on the continent. I'm a big believer that it is, novel ideas that's really going to change our economies. Novel ideas with good execution, strong founding teams, and good fundamentals and support that will really drive tremendous change across the spectrum on our continent. So I'm quite keen on this. I love supporting women, so I'm super excited that the 2 entrepreneurs here today are women. And yeah, excited to be here. Thanks, guys.
Fabulous. And so you've been in the investing sector in West Africa for quite a while as well. Have you also seen an upswing in startup activity in Nigeria in particular?
Absolutely. So my career, I've spent my whole career in alternative investments, over 20 years now, here at home in Nigeria, where I live, also in the US, in Europe, and the Middle East. So I've seen a lot across the board, and coming home many years ago, it was easy to sort of compare where we are to where the Western world has evolved to in venture, in private equity, and other alternative asset classes. In really just a few short years, I've seen tremendous change here. And a lot of that has been driven by access to capital, openness of the market, and other local dynamics that have made it more conducive for entrepreneurs to be able to get their businesses off the ground. And I think, numbers are much higher, just more ideas coming out of our continent. So a lot has changed. There's still a lot more to come. And I'd really like to see a lot more capital sources plugging in to the venture space and supporting our entrepreneurs.
Great. Well, very, very happy to have your perspective on this program today. So, and we have the results of the poll, it looks like. It looks like we have a good representation from Africa as expected, but also a number of folks from North America and Europe as well. So welcome all to the show. And we also even have somebody from Asia, so welcome. All right, well, let's move on to the presenters. Yvonne, and please correct me if I'm mispronouncing this, but Ugwem, welcome to the show. Are you guys ready to present? Assume that's a yes. So, but before we get started, great. Before we get started, let's go over some rules of the game. So each of you will have 5 minutes to present. That's 5 minutes. And we'll have another 15 to 20 minutes for questions and hopefully some discussions on a deal. We will cut you off at 5 minutes, so please help us respect the time so we can have a good discussion. So first up, we have you, Yvonne. Are you ready with your presentation? And if you are, we'll rock. Wonderful.
Thank you again for having me. Really excited to be on the show. Very simply, with Indicina, what we're building is a cloud-native, full-stack lending as a service platform. First thing I'll do is introduce the team. Yvonne, I used to head strategy of one of the largest West African banking groups before Indicina, and my portfolio covered all of the Africa businesses, both bank and non-bank. On the CTO side, Jacob used to be the lead engineer that builds Conga Pay, so very strong fintech experience. Engineering side, Thierry was an early engineer with Stripe. Carlos, chief data scientist, has very strong credit modeling experience in different emerging markets. And Yemi, our CFO, has very strong finance experience. So this is a very strong team that knows banking, knows fintech, and knows credit modeling. Essentially, with what we're doing is that we're helping lenders, African lenders, accelerate their digitization plans. Part of that is to kind of stem some of the losses that they've seen with third parties. And some of the challenges that we know that they face is, high cost infrastructure, legacy technology, and even, non-specialized talent with, this kind of, digital native world. But our theory is that they still have, huge distribution advantage, and we're really helping them to crack the digitization code and fill in some of the customer experience gaps. And so with our platform, we built it in a way that it's very modular and, can go end to end and covers, key customer journeys, customer acquisition, application processing with an API library to really capture and process internal and external data sets, and ML-driven engine for credit decisioning and even post-monitoring. And some of the early results we've seen is really being able to drive improvements in terms of turnarounds and improving risk outcomes. This is, a real life scenario where we're working with a client that was kind of semi-manual in their process, and we were able to kind of, shorten that time as well as improve default rates. In terms of our business model, it's very simple. There's 3 parts to it. There's an integration fee, and then we make a fee of every application process, and there's, a commission on the back end of it. So, very scalable. In terms of our traction, we've actually made significant traction, especially with, the high value, enterprise clients. That's something that with our domain knowledge, we've been able to prove. So we have, 2 commercial banks that we're working with, over 20 microfinance banks, processed about $32 million in loans, covering 25,000 customer profiles. In Q2, we, doubled our, customer signups. On the competition side, the way we look at the landscape, there's a lot of competition, mainly on kind of the back office, core banking solutions. But with us, our focus is really on, the part of the business that touches the customer. As we look at our, roadmap, we really started off very niche with kind of a credit scoring as a service. And really, we're now broadening into kind of lending as a service platform. And eventually, with the advent of kind of embedded finance, really helping, vertical SaaS companies, really unlock that value. Finally, some of the numbers around our raise. We're raising $750,000. We're about halfway through that in commitments. Valuation cap of about 2.5. In terms of some of our numbers, like I said, we have about 24 customers so far, double that in last quarter. And really this raise is really to help us unlock the demand that we're seeing. Thank you very much. And open to any questions that you may have.
Thank you very much, Yvonne. Well-timed presentation. Over to the angels for comments and questions.
Yvonne, thank you so much for your presentation. It's very succinct. Thank you.
No problem.
So well done on getting this business off the ground. I can tell you, as someone that operates in the Nigerian banking industry, that digitization in all its forms is really a key imperative for all banks at the moment, and I think is going to be the key driver of asset growth for banks for some time to come. So well done. I was hoping you could speak to us a little bit more about how you make money. I mean, I know you showed us your pricing profile, but I'd like to know a little bit more specifically about what you believe, sort of what is the critical service that you're offering to the banks and other financial institutions that they're not able to do themselves at the moment, and how you increase value for your own company. How do you hit that top line with these institutions? Your own top line.
Okay, cool. Jim, do you take all the questions or just kind of one by one?
Yeah, go ahead, one by one. It's all good.
Okay, fine. Thanks so much, Ijoma, for that question. So again, on the business model side, there's three parts to it. And I should mention there's an extra layer in terms of the customer base. So today we're serving the banks, we're serving microfinance banks and microfinance institutions, and increasingly we're starting to see demand from kind of vertical SaaS companies that want to embed financial services. So broadly in terms of the services that we provide, and we've done it in such a way that's modular. For the banks specifically, to address your question, what we're doing for them today is kind of real-time credit decisioning. So really providing them with predictive analytics tools to be able to do, risk profiling of their digital portfolio in real time, which is something that we find that is new for them. So the whole idea of being able to kind of process different data sets, both what they have and what exists externally, which we're plugged into, and really crunch all of that in real time to make credit decisions. And what that does for them in terms of value is, you're improving risk outcomes, you're improving kind of a lot of the subjectivity in that process, and really allowing them to kind of go to market faster with a high quality digital product. Now for the MFBs, they need a little bit more help in terms of, the entire customer journey. So today, there's the kind of the paper and pencil, so they need help in terms of customer onboarding with all the KYC requirements. They also need kind of the credit decisioning as well with the underwriting. And then we also actually even support kind of, in terms of kind of payments and whatnot. So for them, it's more kind of end to end. And so then going into kind of our business model, if you look at kind of, the customers that we serve, there is, the part about, being able to earn off applications processed. And then, of course, when you talk about lending as well, there's kind of the commission fee on interest income. And so that's really, the big driver. I hope that answers your question. I'm happy to deep dive if you want it.
Yeah, no, I think that's fine. Thanks, Yvonne.
Awesome. Thank you so much.
TDIK.
Hi, Yvonne. Great presentation.
Hey,
again.
How are you?
I am a fan of using AI for lending and other types of digitization, so well done on that. I guess the question that I have for you is, when you're looking to do this, and you listed a number of competitors that are out there in the space, and there are a number of other ones that have gone down this route in terms of using AI. I think Carbon have tried that, Migo have done that as well. So when you then look to then go to those banks and see you have a unique data set and a unique approach, what are you telling them that's different from what other people have told them before? I'm sorry to ask that question, but
No, it's a good one, and it's a very good question. So, in terms of the differentiation for those names that you mentioned specifically, and I should mention, if you take a step back, I think I was still in the bank when a lot of these digital lenders came, and I was in a very large bank, huge distribution network. We had branches all over the place. And then all of a sudden you heard about, a Carbon that didn't have branches, and all of a sudden we saw some of the numbers that they were posting, and we all stayed up and said, what's happening here? So that generation, quote unquote, of fintech did a very great job in really proving the case of applying kind of a statistically driven approach to credit underwriting. Now, the main difference between us is just that we don't have a balance sheet. So we're not taking any balance sheet risk. So for us, it's more kind of an infrastructure play versus kind of a direct lending play. And so in approaching these customers, whether it's banks, whether it's non-banks, it's like, look, we're providing you infrastructure, we're helping you, get up to speed, faster. And maybe because it's my bias being a bank, like I said, I still feel like in this part of the world and, most other markets, kind of the banks and the large scale banks still have the advantage in terms of kind of distribution and owning the customer relationship. They just kind of need that help in terms of, filling in some of the gaps and being able to do it faster. So the main difference is just, it's more of an infrastructure play than kind of direct kind of risk.
So if I dive a little bit deeper into that, so as a SaaS provider, the unfortunate situations that people try to break away from SaaS providers over the long term. So what are you looking for in terms of your product roadmap to maintain a stickiness factor with these banks? Or are you going to try to go into the B2C side and actually own some of the customers yourself?
Again, very good question. And, and I find that a lot of people have kind of different theories. There's some people that want to push you towards, look, just eventually go and do the consumer side and, and focus on that. And so it's a good question. And, it's one that, I want to be very kind of thoughtful about. I think there's advantages that you can build kind of going with our route, incubated insights with kind of the banks, with the MFBs. And, we've all seen that kind of infrastructure type models and, some of the advantages that you build over time, whether it's kind of with the data that you see. And so you're in a better position with kind of product development and whatnot. And, any kind of business model that has kind of, that data play to it, there's just so many different ways that rabbit hole can go. So it's a good question. I would say, if you ask me today, my bias is kind of the non-consumer route to kind of stick with, the infrastructure play, especially as you see that, like I said, you now have this increasingly, theme around kind of vertical SaaS companies with embedded finance and whatnot, and, very exciting stuff. And, who knows how that could go. And so if you're still kind of focused on that infrastructure play, there's a good chance you don't really get squeezed out, right?
TD, any comments or questions? Love to hear your perspective.
Yes. First of all, my apologies because I hope I'm not repeating anybody's questions. I got lost for a few minutes, but this is a very exciting and high growth area, which we all recognize, being driven by the fact that the underbanked population on the continent is horrendous. And the banks, through policies, are now sort of being forced to scramble into these areas and compete with fintech. But my question is really around your organization. First, what's your sustainability model? And secondly, I didn't get what stage you're in now, whether you're in growth or you're earlier. But my second question is around what is the governance structure you're running with, and how is that working for you?
Okay, thank you very much, Tommy. So two parts to your question: one around sustainability model, and then the phase that we're in, and there's also a question around governance. In terms of our sustainability model, right now, with our focus is, broadly, as we look at the customer landscape, you have kind of the banks, then you have the microfinance banks, which is kind of the non-bank financial institutions. And the last part, like I said, that's coming up is, a lot of the kind of vertical SaaS. A lot of our focus is those kind of first two areas, really just working with them and really helping them, assisting them with kind of their digitization plans. And, that's something that, it's a very big market, working with kind of enterprise clients. And that's something that, in terms of kind of sustainability, we're very confident about. And then later on down the line, as we really start to mature on that embedded finance model, that's where the SaaS companies come from. In terms of stage, will be considered early. Certainly pre-growth. I know there's different kind of metrics around, how you define growth and whatnot. So it's pre-growth. In terms of
Post revenue,
governance,
though.
yes.
You're already taking money. Okay, thank you.
Yes, no problem. In terms of kind of governance, I mean, there's a legal entity in Delaware, there's one in Nigeria.
Before you go into governance, could you just talk a little bit about your traction so far again? What is your revenue in the last?
So right now, I mean, last month we made about $4,000, but in terms of contracted value, it's a few $100,000 from a lot of the banks and the non-banks that we signed up.
I was actually trying to understand a bit more on the momentum. So what's like month-on-month growth like? Is it climbing or it's decline because of COVID?
No, we've actually been seeing growth. I mean, in terms of in terms of kind of monthly revenue, we've done kind of starting this year from kind of the first six months of this year, it was kind of 4 times what we started with, and then like I said, last quarter we doubled our customer sign up. What we've seen is that with this pandemic and the season, there's obviously been an acceleration towards digitization across board with all the customers that we're working with. So we've been seeing increased interest, and really it's just really about execution.
Sorry, I wanted to stay on that revenue just for a second more, which is if you say 4 times, that means you started into the year at about $1,000 a month and you've grown to $4,000 a month. Is that correct?
Correct.
Okay. So where does your board sit? Delaware or on the continent or both?
Both.
Okay.
Yeah, before I cut you off, you're talking about the entities that.
Yeah. It's but Tommy just confirmed that. So there's the Delaware one, and there's the Nigeria one.
Gotcha. And is the Delaware corporation the parent corporation here?
Correct.
Okay. Excellent.
So presumably IP rights are housed in Delaware.
Correct.
There's a question from the audience, or a comment from the audience from Philip Reed. What's your plan with dealing with COVID and how COVID may affect some of the credit scores since they may be out of the normal expected spectrum?
It's a good question, and our chief data scientist Carlos has very good experience with that, and he's been through kind of 2 crisis situations and really understands how these models kind of hold up. For us, like I said, in terms of customer acquisition, we actually saw kind of a steep growth because of the digitization. And what I always say with, on the credit side is that even if you have lenders that kind of totally shut down lending, a lot of these models beyond just kind of, your admissions models, a lot of these models really just help you manage even kind of existing portfolios. And so there's a lot of value that can have. And so that's what we were doing with our customers, really just, helping them to kind of, look at their existing portfolios, try to get a better assessment of kind of risk and how to handle them. And so that's some of the stuff that, we're seeing in the season.
And Yvonne, with the banks that you have relationships with right now, are they exclusive, i.e. they're not using any other provider? And what's the typical tenure of these relationships you have with the banks? Are they month to month, or have you already locked them in for a long-term agreement?
They're multi-year, so it's not month to month.
Okay.
And there is 1 or 2 that I know that we're working with, and there is another provider in there. So it's a good question, and you probably know this as well, because it depends on kind of the product that you're working with and stuff like that.
Okay, so they have another provider, so they're using both in tandem.
Well, that one that I talked about, some of the others that we're working with, most of them, it's really just us at this point.
Yeah. Okay.
Yvonne, a quick question about service offering, specifically on credit decisioning. Yeah. I'm curious as to how have you been working with telcos or any other service providers to try to create credit profiles for underlying customers? How do you deliver that aspect of your offering to your enterprises that you serve?
It's a good question. And I think if I look at the range of data sets, what sits in the bank in terms of bank statements, whether it's telco data, whether it's payment data, credit bureau and whatnot, Right now, I would say that we're already kind of plugged into like, you know, a good 80–90% of them. The only standout is telco, but there's kind of that's kind of still in the negotiation stage. You know, there's one telco that we're working with. But you know, having said that, and it's something that, you know, we tell our clients, you know, a lot, you know, especially with kind of, you know, the large clients, you know, they're sitting on gold, so to speak, in terms of the data that they have. And what you find is that the value is that, you know, you're just not really harnessing it, you know, and really crunching it in the right way to be able to make the right decisions, right? So a lot of the clients, especially the big ones, you know, I always tell them, if you do not add another extra data point, you know, you can still get a lift off what you're using now.
And sorry, another question. So the clients that you've already signed on board, how much of their loan portfolio on average are you looking to service now, or are you actually then looking to pre agreements to actually help them with? Because that's a testament to their dependence.
Yeah. So good question. So usually you would start with, you know, maybe like a high single-digit portion of their consumer loans. And the idea is that you want to ramp that up over time and even broaden beyond kind of consumers. So with our customer base right now, we're covering kind of consumers and SMEs. So yeah. So the idea is that you kind of land with one portfolio, grow with that, and then, you know, start to broaden because, you know, for a typical customer, there's tons of other products.
Great. Well, that's a great discussion so far. We'd love to hear from the angels and from the audience what you all think about this as a potential investment. IJ, IK, TD, your thoughts?
So Yvonne, again, really a much needed service that you've built out here. And it's interesting because I think there were some questions earlier about sustainability. You know, all banks are looking for solutions to this digitization problem. And I think the approach some are taking is to bring this expertise sort of in-house. So maybe starting with someone like you and trying to build it out. So it'll be interesting to see, I think, and this is more just a comment, but I think you certainly want to align yourself with every client's digital journey and maybe try to evolve yourself as well as these companies grow and go along so that you always have a place at the table. I would love to talk more about your plans for evolution. I think as from a decision-making and investment perspective, I would love to just talk more and see a little bit more about your numbers and your valuation and what your plans are. So for me, I can't make an on-the-spot decision right now, but I can definitely say that I'd love to follow up this conversation with you and maybe a few others that might be interested in hearing more and dive a little bit more deeply into your client base and your numbers. And again, you know, would love to support you, I think, if it checks the boxes for B. So I'd love to continue.
Thank you.
Yvonne, while we're doing that, would you mind putting up your ask again, or maybe reviewing your ask again? What's your current valuation? What are you asking for?
So yeah, the ask is $750,000. We're halfway through in commitments, and in terms of valuation is 2.5. It's a valuation cap.
Gotcha. Great.
And this is your first fundraise, Yvonne?
No. We had kind of a friends and family round, angel round before that.
Great. Well, thank you very much, IJ. Hopefully we can help facilitate that discussion and maybe pull together a small group of those who might be interested. And if you're in the audience, feel free, if you want to be part of the syndicate or part of the group discussion with Yvonne, please let us know. We'll put everybody together. IK, what are your thoughts?
Yes, great presentation. I like the space. I've researched this space for a number of years in different companies. So happy to have a conversation. I was just more concerned about the timing in terms of when you're looking to close the round out, but I'd like to link up with you and talk further. I understand the challenges you're facing in terms of the telcos because they're usually one of the hardest ones to crack to have that relationship. So I emphasize with that. So let's
Sure. Thank you so much.
Great. Thanks, IK. TD?
Could you wind back again and tell me what sort of revenue to date is, please?
It's about $26,000.
Okay. Do you have any intellectual property that is either patented or in the process or protected in any way?
Not yet. Well, in the process, right? So we build all our tech from the ground up. And so we're in the process of, making sure that, like I said, the company owns the IP, but we build all our technology from the ground up.
Yes, but is there any of it that is actually protected legally or in the process of being protected?
No. So there's no patent. There's no patent that we have there.
And how old is the firm? How old is your organization again?
We kicked off late 2018.
At $2.5 million, I think it's a bit pricey based on what I've heard. I remain to be convinced, and I'm totally open to that. But yeah, that would be my feedback. Is it's on the high end of what I have experience of in terms of this space and these valuations.
Okay, thank you so much for that feedback.
You're welcome.
Great. Thank you very much, TD, for the feedback. And just sharing the results from the audience. So we have feedback from across the spectrum with a number indicating a strong interest to invest and some others who are passing. So yeah, please feel free to get in touch with us if you want to continue the discussion with Yvonne, and hopefully we can pull together a group to continue the discussion. Thank you very much, Yvonne, for presenting and for answering the questions. And wish you the best of luck with your current raise.
Thank you. Thank you. Really appreciate it.
All right. All right. Well, let's move on to Shyft.
Good afternoon or morning, everyone, depending on where you are. My name is Yvonne, and I'm the co-founder and CEO of Shyft Power Solutions. So essentially, just as Africa leapfrogged over landlines to mobile, Shyft is really enabling a leapfrog over unreliable centralized power grids to more intelligent distributed energy landscape. We build IoT and energy management software to optimize renewable and alternative energy systems. But first, I'll give you a bit of background about myself. Shyft is a byproduct of my work as a Stanford engineering PhD student, where I also met my co-founder. I'm a civil engineer, previously worked as a risk advisor for upstream projects at ExxonMobil across Africa, South Asia, and the Americas. But what's really special about Shyft's leadership is that we uniquely bring together both local knowledge and technical expertise embedded in the market and on the ground. We're also supported by a close group of advisors who come from industry leaders such as Tesla, EDF, and UC Berkeley, and have been backed by investors including the likes of Total and Backstage Capital. But our initial market is my home country of Nigeria, and I know I'm likely preaching to the choir here, so I'll keep it brief. But you essentially have a massive market opportunity because of the unreliable electricity grid, which has forced widespread dependence on millions of backup diesel and gas generators. But here's the problem. Actually managing these hybrid backup power systems is expensive and problematic. Although the energy from solar and batteries is cheap, adopting and managing these only make the systems even more complex. And honestly, at the small distributed scale, it proves to be challenging. Take, for example, one of our early customers. A couple of years ago, I was speaking at the World Bank and met the MD of one of the largest banks in Nigeria at the time, who then shared with me that in the sector, it was common to be spending more on energy than all of human resources. And they didn't have reliable solutions for managing power or baseline monitoring data. Integrating solar and batteries would only make the systems more complex and problematic. And so that's why I'm excited to talk about Shyft, an energy management platform that optimizes asset performance and improves operational efficiency for hybrid power systems, so that's solar, batteries, generators, as well as the grid connection. And Shyft goes beyond just simple monitoring or data on a dashboard by using advanced analytics and machine learning to give complete control and optimization in real time. And because we also own the entire technology stack from the IoT to firmware and software, we achieve over 99% data reliability compared to struggling competitors in the market. As well, unlike competitors, Shyft isn't an accessory. Shyft is a drop-in, plug-and-play solution for a transfer or changeover switch, something that any backup power system already needs, which means for new sites, we can bundle as a balance of system versus another line item. And so with Shyft, our customers have seen up to 60% ROI on their installations, up to 67% reduction in maintenance visits, to 50% reduction in energy costs. For one customer, we identified nearly $3,000 in losses in the first couple of weeks. And another recent site, a bank, we realized that over 40% of their energy OpEx was actually diesel pilferage. Today, nearly every major bank in Nigeria has at least a branch using Shyft technology. We sell Shyft as a hardware-enabled service to businesses, facility management firms, and mini-grid developers, and generate about an 80% margin per site over a 36-month lifetime. But part of Shyft's growth strategy is, and the way we differ from a lot of other energy management companies, comes from our unprecedented access to both consumer energy and grid data, as well as control of assets. Today, the collective capacity of Nigeria's backup distributed resources is more than 8 times that of the national grid. At scale, Shyft platform can provide grid services like demand response, strategic load shedding, and aggregation, which effectively increases the country's accessible generation capacity without building another power plant, truly catalyzing the transition to a smarter energy landscape and smarter infrastructure. The opportunity isn't unique to Nigeria, so international expansion and grid services do serve as key drivers for growth. I'd be glad to share more about this. And so today we've passed critical safety tests for our hardware and secured partnerships with some of the largest backup power companies in the market, most recently finalizing one with Schneider. And when we look at the revenue potential of these partners to Shyft, it's almost at $7 million. We launched in Q4 of last year, or began commercializing Q4 of last year, and have done a little over 100K in revenue to date. In order to support these partnerships, we need to essentially grow the team and transition to larger scale contract assembly. We're raising a $2 million seed round with a little more than half committed coming from the likes of Total, SoftBank's New Fund, and Plug and Play Ventures. I know I'm probably right at time here, but I do want to end with this. Essentially, the energy transition is happening, and I'm sure many of you are aware. Many grid and renewable energy companies are popping up worldwide, and Shyft is really ensuring that they can scale. And so when you back Shyft, you're not backing another horse in the race, you're really just backing the entire race. So I look forward to connecting with many of you and hope that you can join us as we shift to the future of energy.
Great,
Thanks,
thank you very much for a great presentation. All right, over to the investors. Thank you for putting up the ask.
Oh,
Go
yeah,
ahead and
there
leave
we
it
go.
on the ask slide. I think that's perfect. Thank you.
Hi, Yvonne. Thanks for the presentation again. Can you walk us through the revenue model again, the hardware side and the SaaS components?
Yep. So in short, we sell Shyft hardware as a upfront hardware sale. So for example, many of you might be familiar with the changeover switch, or whenever you buy a generator or any type of backup power system, one of the balance, those line items when it says cables wiring, is a changeover switch. We sell that hardware at a price point that competes with existing automatic transfer switches in the market. So it makes the decision making really easy for our customers, either buy a dumb one or buy a smart one. We then license the software, the mobile or the web app for a monthly fee thereafter, ranging from anywhere from about $10 to about $89 per month. It really depends on the portfolio, the size of the customer's portfolio.
Thanks.
Ugwem, thank you so much for your presentation. Obviously, anything energy in a market like ours is really critical, and I think is just the right track for the future. So well done. This sounds like you're doing something pretty great here. But I always like to try to firmly understand business models. And I understand the hardware component and that service, at least at a high level, that service that you're providing to banks and other enterprise customers. I'm trying to understand more fully how you work with the backup service providers. So if you're like a Daystar, for example, what are you helping them deliver their services more efficiently? What are you offering to those companies, and how are they compensating?
Yes. So actually, we actually started by trying to sell directly to banks. We had some success there. But what ended up happening during our early pilots is we'd get to site and there'd be another stakeholder also kind of doing electrical work. And we're like, who are these guys, right? Like, what's going on? And we realized that if we actually partner with them, we essentially get access to a larger customer pipeline. So we went to the site, Daystar was there. I reached out to Daystar, Jasper, what's going on, their CEO. Now those companies bundle Shyft with their offering. So the actual customer paying Shyft is Daystar. The end user also includes the banks on occasion, but people like Daystar, facility management companies, anybody who's responsible for managing or maintaining energy assets is our type of customer. And the value that we're delivering to them is, for example, Daystar, whenever all these sites are remotely managed, they don't have field staff at them all day, every day. They're making their money off of selling a kilowatt hour or uptime. If they can't control and guarantee when those assets come on or off, you have things like people running generators at the wrong time, you have diesel pilferage, you can't set schedules. It's very difficult to guarantee your ROI. So although the model looks great from an operations perspective, it's extremely challenging and really actually impacts their bottom line. And this is not unique to Daystar. I'm just using them as an example. And so what Shyft does is it's not only saying, well, here's a dashboard so you can see what's going on. There are a lot of people building IoT nowadays that can put things on a dashboard and aggregate, from all kinds of APIs. It goes into being able to control, set schedules, override what might be happening on a site. We had a customer site where they kept bypassing the inverter to run the generator off record. And so we can actually remotely control that and shut that all down and make sure that the systems are running correctly. And so that's kind of how we work with some of our customers, as well as like virtual troubleshooting, so they don't have to send field staff out to the site. They can actually diagnose what's going on and reduce the number of visits.
Okay, thank you.
Thank you very much for that presentation. It sounds quite exciting. And what I'd like to understand, as you migrate to contract manufacturing, what kind of talent are you on the hunt for? Because that seems to be where the money's going. And where's that talent going to come from? And how are you going to keep them?
Yeah, so our next key hires are coming mostly from on the software and data science side. So really, because that's kind of what's constraining us right now. We're a team of 5 full-time, and right now we have a little over about 25 sites across Nigeria. If a bug goes wrong, I was this morning with my principal software engineer. There's 2 of us that are trying to troubleshoot. So it's really important that we can build our software team to make sure that we can ensure the reliability and the customer experience. On the contract assembly side, we actually work with major panel assemblers in market, people you're probably familiar with, like Jubilee, Schneider, et cetera. A lot of our hardware comes from existing supply chain in market. So we're not having to go source things from here and there. We can work with existing vendors. The issue is right now we have one major assembly partner who has a capacity of about 40 units per month on a good month. And so we really need to basically de-risk that because our customers are giving us a pipeline that represents far more than that.
Okay, thank you very much.
There's a great audience or great question from the audience from Jay Dunn, who is heavily in the power space. What are the competing products for companies? Who do these customers use if they don't use Shyft?
Yep, great question. So we're kind of in a new age of energy management. I'm sure there's a lot of companies that maybe you even heard of thus far. What's happening, what the initial status quo is that a manufacturer of an inverter, so that's what supports your battery and your solar, they might have a monitoring portal for that inverter, specific to that brand. So let's say Schneider would have its own monitoring portal. For your generators, you can reach out to Jubilee, any of these guys, and you can order additional component from like Deep Sea, and you would connect that to your generator and you can monitor the generator. Similarly, you can order off Alibaba, like a fuel sensor, find someone who can help you get it online. And so people are kind of hashing together monitoring portals. So what was happening is you now had several dashboards and you couldn't actually see the system as one system. And also that reduces the ability to actually optimize the system because all of these assets are being monitored as independent solutions. And so that was mostly the status quo. Over the past year, there have been companies like Beacon, like AMP, like Grit Systems, who've come up with, mostly they're peer software companies, who basically are looking at how can we get really good at aggregating all the different types of APIs or bringing all these dashboards and putting them into a single dashboard. So that's what you're seeing some of these companies doing. When we've gone to some of our customers like Daystar and whatnot, they're actually were using some of these competitor products to monitor all of these solutions. The issue with that experience is there's really no competitive or sustainable competitive advantage there. They're really software engineering companies that are bringing in all this data into a single portal. And so as a company, so really you're still having to go source all of the hardware. You're constrained by the reliability of that hardware. That's actually where a lot of the reliability of data issues come into play. And so that when customers have come over to use Shyft, we're currently actually working with customers who are using some of our competitors today. Really what's happening is they're getting not only full monitoring, they're getting the experience of not having to go source all of this hardware themselves, which is another line item, more accessories on their overall unit economics, but they're also getting the control and optimization that you really don't get when you're using just aggregated dashboards and custom UI UX. And so that's really where we see a lot of customers changing over to Shyft. It's not just about actionable insight, it's being able to act on that insight in real time.
Okay. So you're not hardware agnostic. So your solution is tied to the hardware that you deployed.
We actually are brand agnostic. So we can work with any of the major inverters and generators because of how we've actually coded our own hardware and firmware. There's standard communication protocols that all of these systems use. And so our technology can support those communication protocols.
And what is the typical size of the end customer that makes a product like this attractive from an ROI perspective? Is it based on kilowatts per hour that they consume, or what is that?
No, so since our revenue model is not actually tied to the amount of energy sold, we sell the hardware. We range from anywhere from a 65 amp, which would be like a small house, to our largest system was just an S8 that was 250 kilowatts, 100 homes. So the size, the revenue we generate per the rating of our device can vary from anywhere around $1,000 to our largest order was around like $10,000 for a single system. And so the sweet spot for us, part of our go-to-market strategy was that we want to target the major backup energy companies and facility management companies, because once we form a relationship with them, their portfolio is now part of our pipeline versus going to all the Chicken Republics, all the Domino's, all of the banks individually. And so right now we're focusing on some of the major players, some of whom I listed on that previous slide.
Yvonne, let me ask you, maybe slightly related to Ike's last question, but how do you measure, and maybe it's a bit from an impact perspective, but how do you measure your success? So not so much operationally, which is, you know, your revenues and your earnings, but more at when do you think you have really had an impact on energy efficiency for your customers? Are you thinking about cost saving? Are you thinking about broadening alternative energy options for your clients? What makes you, what triggers success in your mind that we've gone out there and we've actually done some good, impactful work from an energy perspective for these businesses? What are those?
No, that's a good question. I'm going to jump back to the slide just for reference. But if you were to do diligence on us or on any of these energy management companies and go talk to our customers, what these backup energy companies are not going to tell you is that their margins are actually quite slim. And therefore, it's very easy on certain months to not be profitable. Somebody runs a generator too long, people are stealing diesel, they can't control the system correctly, the hours are not happening, the solar utilization is dropping, and that really impacts their bottom line. When you see a lot of these alternatives, we've seen so many of these new alternative energy companies trying to grow in the market, trying to pour solar and storage out. But what's really happening is when it comes to their unit economics, they're still struggling in the real world. In the model sense, it makes sense. When it comes to execution and operation, it's challenging. And you know, they're not going to publicize that, but I'm sitting down with their leadership And they're like, Ugwem, we put in all of these batteries here and the ROI looks terrible because of how the customers are using it. They keep deep cycling the system. And so help us figure this out. Whenever they install Shyft and they're seeing their OpEx drop, they're seeing, I can't tell you how many sites we've combated diesel pilferage, one of the first things that we catch. And it's not minuscule. We just installed a site a month ago at a bank in Abuja, and 60% of their OpEx was diesel theft. Who knows how long that was going on? And that's not just diesel theft. Another site in actually in Yaba, what was happening was the diesel delivery company wasn't actually even delivering the amount that they said. That impacts these companies' bottom lines. You can't expect all of these solar companies to scale when in the real world they're trying to get profitable per site, and it's very difficult to do. And so we think that a lot of it is coming from a technology play, and these companies are operational. They're service companies. They're not deep tech companies. So they're looking to companies like ours that can actually help them solve these challenges. And that's what we're excited about. And that's what makes us feel like we're doing something good. I mean, just to kind of be brief or to wrap it up here, but like when I got started, I didn't think I was going to be an entrepreneur or be building anything with hardware, that's for sure. I do research like that was my background. And we were trying to research what are the barriers to scaling solar business models in emerging markets. And a lot of it's on the operating side. And what technology solutions are necessary. You have big companies like Schneider, ABB, they don't curate products, honestly, for small distributed applications in emerging markets. Their sweet spot was industrial and utility scale. We're really filling in that gap. And I think you can even see that when you see our work now with Schneider and then what projects we're coming on with them.
Great. Wonderful.
That's helpful. Thanks.
So like to hear from the angels on what you think about investments.
I have to go first. Congratulations again. And I really like this. So prior to starting Atlantic Ventures, I used to be in a firm called Helios Investment Partners. And we had one of the largest tower portfolio company for telcos. And part of my work when I was there was to actually look at power solutions for telecom sites, thousands of sites across the country. So I understand what you're trying to do and actually want to learn a little bit more because I think there's a huge opportunity in what you can actually do with the solution. So I'd like to link up.
Sounds great. Look forward to connecting.
TD, IJ?
You're lucky, Ugwem. I see thumbs up from TD. Likewise, Ugwem, I really like this business model. And as someone that manages funds, one of the things I really like, I mean, I don't think you want to think that much about the day you sell your company today, but I see your offering as being something that has a very clear potential exit channel from some of us investors who do invest and exit on a timeline. The fact that you have these, that you're quite B2B and you have these businesses that need your service tells me that there's potential for your business to be embedded in one of those businesses ultimately at potentially quite a large scale. So love what you're doing. I think it's very necessary. I think you're looking at a side of the market that often gets ignored. I would absolutely love to talk about this some more for potential investment.
Great. Thank you, IJ. TD?
I like it. And as you were presenting, I was just ticking off mentally, and you tick just about every single box. I can't wait to find out what Weeby Boa thinks, who I'm quite sure you know. But this is really, really exciting, and there isn't any reason you shouldn't close this round as quickly as possible.
Thank you very much, TD. And I have to say, I think JC, that's me, IK and TD and IJ and JC, I think I'm quite interested in pursuing the conversation with you as well. Both as a customer, we operate decentralized operations that mix solar and generator power in Haiti. And I think this would, and all the problems that you've highlighted, fuel theft, efficient management, integration of different systems, it's absolutely a problem that needs to be addressed, and it costs us tremendous amounts of money. So I'd love to view it from a customer perspective, but also from a potentially an investor's perspective, from two sides. One as potential equity investor in this round, but also under Untapped, which is our Africa-focused company, and we focus on CapEx investments, essentially asset financing. And I think a key part of our asset financing model is data management, is digital control. And so if you're able to crack the nut on creating a database, data-driven solution for power infrastructure management, that's something that could very well be part of the types of asset financing deals that we do under Untapped. So I think on all three of those levels, I'd love to continue the conversation with you. Congratulations. And looking at the poll, I think we have also a very broad range of results from the audience as well. A number of folks who are very interested. And yes, I think there's a broad consensus here that there's a strong interest in Shyft. Thank you very much for presenting your company and for being on the show. And we'll definitely follow up with everybody who's indicated interest and pull together the conversation a little bit further. Thank you very much.
Thank you, everyone.
And with that, we've had another hour with us. Thank you very much. I just want to encourage everyone to please, if you want to keep up with what we're doing and the upcoming episodes, who's going to be on and so on, please follow us on LinkedIn and Twitter at Find the Nest on Twitter, and follow Untapped on Twitter. Please join us there. And if you are an entrepreneur and you would like to be involved with future episodes, please connect with us by sending an email to connect@findthenest.org, or apply by sending a WhatsApp message to the number you see on the screen. And with that, I hope to see you next Tuesday at the Nestcast live show talking about race and entrepreneurship in Africa, and also on Thursday for the French version if you speak French, and then on September 3rd for our next English Nest show. With that, thank you everybody for joining, and we'll see you next week.